Welcome to Stuck, Time to Improv. I'm Mary Scott with Business Riff, and I want startups to be wildly successful. And I'm so excited today. We have David Yocom from iSelect. He's an actual investor. And come on, what do startups need most is money. So let's find out exactly what an investor is looking for when he meets a startup. Welcome, David. Thanks for coming.
Mary, thanks for having me. I really appreciate it.
That's great. So what made you decide to become an investor in startups?
Well, it definitely was a fairly serendipitous route. I think after I graduated from undergrad, I joined this program called Venture for America, which is a really awesome program for recent grads who want to work in innovation and startups in venture. And truthfully, I was really excited about working in the universe of sustainability, climate change, food and agriculture, and wanted to find a way to work closely with technologies and people who are working on some of these major challenges that we were seeing in the food system and in climate, and came across this early stage fund in St. Louis through that program called iSelect back in its early days, and was doing some really interesting work across innovating in the food system as well as in the human healthcare system. Today, we invest in three verticals, principally innovating for healthier, more sustainable food systems, more accessible and better understood human health and nutrition, and healthcare technologies focused on cardiometabolic disease, principally type 2 diabetes, obesity, and cardiovascular disease. And so for me, it was an opportunity to work with founders of companies, to work to build a network of investors and to come to understand technologies that would be really important in a healthier, more sustainable future.
That sounds great. And those particular industries are definitely big in St. Louis. So this is a great place to find
Absolutely.
Those startups.
Yep.
So, what's your process? What do you want to hear from a startup when you're considering whether or not to invest in them?
I think if there's one thing that I can say about working in venture or even just working in entrepreneurship is that it's a relationship business. And so when you make an investment, particularly as an early stage investor, you're very much investing in people and in a team that is both a team that you believe in, and you believe that has the business acumen and the technical acumen to be able to accomplish the plan or to change the plan to pivot into a direction that can lead to success. But in the same token, as somebody that you really like to work with and that you want to work with, I mean, you could see yourself working with in a deep way over the next 5 to 7 years. And so that's something that I am much more attuned to now than I think when I first started in this role, where you're doing lots of competitive analysis and lots of technology analysis and thinking about the market size, and all those things are super important from a diligence perspective. But when it really comes down to it, you are trying to take part in the building of a company for a technology and a product that does not yet exist. That takes a lot of optimism and a desire to work with somebody to work through some of those challenges through the unknown. And I think that's one of the most important things, is finding people that you are excited to work with and you believe in going forward.
Yeah, I was thinking I meet a lot of startups who are very passionate, but they're not particularly focused. So what's important to you there?
Yeah, so one of the things that we talk a lot about with technology and business models in ventures, especially early stage companies where they're still figuring out kind of where their sweet spot's going to be, is we talk about this concept of optionality. And so we pair this thinking around optionality with this thinking around focus. So we like technology companies that have the opportunity where at scale, their technology can be very useful to a wide variety of customers, could solve a lot of different kinds of problems, and can be very useful to building a large venture scale business. But initially, we want the company to go out and solve a problem. We want them to go out and solve a problem for a customer and really build a product that somebody loves and that wants to refer to other customers in their network. And you can do really well just doing that. I mean, you can build a really great company that just solves a problem for a particular customer. It might not be, a venture scale, like billion-dollar exit type of opportunity, but you can still get a really solid return, and you can build a product that really matters. We really like companies that can do that, and where we see that their technology platform, once they've accomplished point A, has the opportunity to say, we've proven this product works, we've proven that it has an ROI, we've proved that customers love it, and we think we can go do the same thing in this adjacent industry or for this adjacent customer type. And so we prioritize focus in terms of focus early, figure out where the pain points are, build a product that people love, And then once we're there, how can we take that and replicate that result in a wide variety of industries and customer types? And that's what venture dollars are good at doing. Venture dollars are good at saying, we've got this thing, we've got product market fit. Let's go and build it as quickly as we can and go capture as much of the market as quickly as we can. So we look for things like that, especially early on in some of these companies.
Okay, does a startup need to have a minimally viable product, an MVP, before they talk to you, or do you help them do that?
It depends on the type of business. So, when it comes to software businesses, yes, we're typically looking for some evidence of some anchor customers who believe in the product. The product doesn't have to be perfect yet, but we want to have a really clear understanding of what the problem is, how the product solves that problem. That's a little bit easier to evaluate when it comes to like software companies. When it comes to more like life sciences and diagnostics and companies that are working and developing products for the agriculture or healthcare industries that have longer regulatory timelines, et cetera, we're typically looking for some evidence of data. The degree of whether that's in vitro versus in vivo data typically is a little bit more of a nuanced case. We're willing to take more risk on companies where we have deep networks, where we feel like we've got the right kind of support that can help influence the outcome of a company that may have a lot more unknowns. If it's somewhere where we feel like we don't have quite as much influence, we're probably going to want to see a little bit more likely in vivo data, or just a more robust data set than we're comfortable taking a risk on at that time. So, typically we are looking for some sort of proof of concept of the idea, as opposed to a pre-product type of investment or pre-technology.
Proof of concept, or they need to be in revenue to some extent, or at least intent for revenue.
For companies where revenue is the core part of the business, again, there are companies that build life sciences products and tools where they will eventually partner those assets off to a larger, could be a pharmaceutical company, could be a large ag company like a Bayer, formerly Monsanto in St. Louis. And so we definitely have companies like that build products that are going to have those long timelines that we got to prove it out either in an agricultural context, or we have to prove it out in sort of a clinical trial context. And so those types of companies, we don't expect to generate revenue. And we may expect them to exit before they ever generate revenue, in fact. So now if those companies go public, they may have an opportunity to generate the revenue themselves, but I would say that's not necessarily the norm for the companies that we're investing in.
Okay. And when a startup is pitching to you, are there any red flags?
One of the things that I think founders struggle with is that oftentimes very charismatic founders will have an easier time raising money than ones who perhaps are not quite as charismatic, even though the product technology pieces may not stack up. And that I think speaks to the fact that you can have a fantastic product, you can have an amazing technology, all these other components. And as long as this is a human to human interaction type of business, you have to be in a position where you can tell your story to a lot of different types of investors. And I think doing some of that pre-research to understand where your investors' level of understanding is and getting a good understanding of how basically to be a teacher. I mean, you are the expert on your product, your technology, the science that you're building, and you might be pitching this deal to somebody who's been, a PhD, drug development for the last 25 years, or somebody who's doing their first therapeutics deal, or same thing on the food and agriculture side. We've seen so many generalist investors move into their first food and agriculture deals. And the worst thing you can do is make the person that you're telling your story to feel dumb about the thing that you're trying to teach them about. And so I think that goes both ways when we're pitching investors too, trying to get a sense of who am I talking to? What parts of the thing are they going to understand? What parts of the thing are they going to need to be brought up to speed on? And I think when you create understanding, it's like the same thing when you're in school and you have that light bulb moment. You go, oh, wow, that's so cool. I get it. And helping people get to the point where they get it is one of the easiest ways that you can grease the wheels on your fundraising process. Because then once they understand the problem, they want to tell other people about it. They become a reference source for you. Oh, there's this really cool technology. It's solving this thing and I understand it and I can help tell the story. So I think you want to put yourself in a position to not only tell your story well, but create evangelists out of the people that you tell your story to, so that they're so clear on the problem you're solving that it's a no-brainer for them to talk to others about it.
That is great. This has been very helpful, David Yocom from iSelect. Thank you so much. This is Mary Scott from Business Riff. And like I said, I want startups to be wildly successful. So join us again for Stuck, Time to Improv.